In this video we are going to talk about Dividend Kings. So before starting, please like this video and subscribe to this channel for future updates. The Dividend Aristocrats, a group of blue-chip firms in the S&P 500 index that have all raised their dividends for at least 25 years, may be familiar to dividend growth investors. However, there is a group of equities that are less well-known but have even longer dividend streaks. The Dividend Kings are a select club of investors. For at least 50 years, they've grown their payouts. There are 65 Dividend Aristocrats and just 31 Dividend Kings at the moment. Dividend Kings can be found in a range of market areas. The following list of 10 Dividend Kings, on the other hand, all have a few essential characteristics in common: long-term competitive advantages, long-term growth potential, and a proven capacity to weather recessions. Number 10. Lowe's Companies, Lowe. Lowe's is a home improvement and hardware retailer with over 2,200 locations in the United States and Canada. And Lowe's is currently running on all cylinders. Over the last decade, it has benefited from a number of economic tailwinds, including cheap loan rates and strong housing and construction markets. Lowe's increased its net sales by 25% to $89 billion in fiscal 2020. As a result, adjusted profits per share, EPS, increased by 54%. Ranging from $5.74 to $8.86. Because of the company's strong financial achievements, it is able to distribute a large amount of cash to its shareholders. During fiscal 2021, Lowe's aims to spend $9 billion on stock repurchases. In addition, during the last 5 years, Lowe's has increased its dividend by 13% per year. Number 9. Cisco Corporation, SYY. In the United States, Cisco is the largest wholesale food distributor. It now delivers food to over 600,000 sites, including restaurants, hospitals, schools, hotels, and other businesses. The coronavirus epidemic, which forced the closure of restaurants, schools, and other dining establishments, has had a negative impact on Cisco. As a result, the company's revenue and earnings have plummeted. Cisco's sales declined by 23% in the first half of this fiscal year compared to the same 6-month period the previous year. While Cisco has been heavily struck by the pandemic, it expects to benefit greatly from the recovery. Investors anticipate a speedy rebound once restaurants and other dining establishments are fully operational. To be sure, this helps to explain why Cisco's stock is approaching record highs. The current yield on the stock is 2%. Number 8. Hormel Foods, HRL. Hormel is a large food manufacturing firm with yearly revenues of around $10 billion. Skippy, Spam, Applegate, Justin's, Jenny O, and more than 30 additional brands are among the company's main brands. For years, these brands have resulted in consistent growth. Hormel's diluted earnings per share has grown at an annual pace of 8.6% since 2010 and will continue to do so through 2020. Hormel has increased its dividend for 55 years in a row thanks to this type of sustained growth. Hormel's outstanding track record of success can be attributed to the strength of its brand and the defensive character of its products. Hormel products are ranked first or second in more than 40 categories. During economic downturns, these brands hold up remarkably well. Number 7. The Coca-Cola Company, Co. Coca-Cola, the world's largest non-alcoholic beverage company, ranks 7th on the Dividend Kings list. However, in established markets such as the United States, decreased soda consumption offers a hurdle. Coca-Cola has responded by investing extensively in juice and tea. Costa's almost $5 billion acquisition gives it rapid access to the coffee market. Coca-Cola reported at the time of the acquisition that the global coffee market was increasing at 6% per year. Coca higher growth colas segments bode well for the company's long-term prospects. As a result, management predicts long-term organic sales growth of 4% to 6% each year, resulting in earnings per share growth of 7% to 9% per year. And this is more than enough growth for Coca-Cola to keep growing its dividend year after year, as it has for the past 59 years. Number 6. Johnson & Johnson, J&J. Johnson & Johnson is the largest healthcare firm in the United States, with a market capitalization of more than $400 billion and annual sales of more than $80 billion. Pharmaceuticals, medical equipment, and consumer health items are all part of J&J's business model. Each of the company's 28 platforms or products generates over $1 billion in annual revenue. Many years of significant growth have been enabled by holding leadership positions across the healthcare spectrum. Over the last 20 years, J&J has averaged 6% annual operational sales growth and 8% adjusted EPS growth. The corporation generated more than $20 billion in free cash flow in 2020. Because the company generates so much cash, it can compensate its stockholders. J&J has raised its dividend distribution for 59 years in a row, and the stock currently yields 2.5%. Number 5. Procter & Gamble, PG. On our list of dividend kings, Procter & Gamble ranks 6th. P&G is a consumer goods behemoth. Pampers, Tide, Bounty, Charmin, Gillette, Crest, and more well-known brands are among them. Furthermore, in fiscal 2020, the corporation made $71 billion in revenue. P&G has been able to reward its shareholders for decades thanks to its diverse portfolio of outstanding brands. P&G has been paying a dividend for 131 years and has grown it for 65 years in a row. Thanks to a renewed focus on efficiency, P&G's dividend growth rate has accelerated in recent years. In addition, over the last 5 years, P&G has sold off a number of slow-growing companies. The sale of Duracell to Warren Buffett's Berkshire Hathaway, BRK, and a portfolio of over 40 cosmetic brands to Coty are two notable divestments. Coty. Bigger profit margins and, as a result, higher dividend increases were achieved as a result of these initiatives. The most recent annual raise, for example, was a 10% increase. The current yield on the stock is 2.6%. Number 4. Genuine Parts Company, GPC. Since its founding in 1928, Genuine Components Company has developed into a vast conglomerate that offers automotive and industrial parts, electrical supplies, and general business products. Furthermore, the Napa automobile parts stores are Genuine Parts' flagship company. The company has a strong track record of consistent growth. Sales and profits have increased in 87 and 76 years, respectively, in the company's 93 years. Genuine Parts aims to pay a cash dividend of $3.26 per share in 2021, up 3% from the previous year. Furthermore, the company will have paid increasing dividends for 65 straight years in 2021, making it one of the dividend kings with the longest run. The current yield on the stock is 2.5%. Number 3. National Fuel Gas, NFG. National Fuel Gas, a diversified energy firm, is third on the list of dividend kings. Exploration and production, which produces about 800 million cubic feet of natural gas per day, is the company's main segment. Midstream infrastructure, such as pipelines and storage facilities, is also managed by the corporation. With over 700,000 utility consumers, National Fuel Gas also has a downstream business. National Fuel Gas is a rare example of a consistent and reliable energy source. The energy industry is notoriously cyclical, especially when it comes to activities such as exploration and production that are dependent on the underlying commodity price. National Fuel Gas is the sole energy stock on the list of dividend kings as a result. It's also one of the highest-yielding dividend kings, with a current yield of 3.5%. Number 2. Colgate-Palmolive, CL. Colgate-Palmolive is a consumer staples company known for its well-known brands such as Colgate, Palmolive, Tom's of Maine, Ajax, and Hills. The firm has a distinct edge in that it has a high level of exposure to emerging markets. Indeed, they are developing countries with stronger rates of economic growth than more established economies. Emerging markets, such as Latin America and Asia Pacific, accounted for 44% of Colgate revenue-Palmolive's in 2020. As a result, Colgate-Palmolive could outperform the typical dividend king in terms of long-term growth. Meanwhile, the company continues to pay out consistent dividends to its shareholders. Since 1895, Colgate-Palmolive has paid dividends on its common shares without interruption. It has also raised its dividend for 58 years in a row. Number 1. Altria Group, Mo. Altria Group, a tobacco conglomerate known for its trademark Marlboro brand, is the first dividend king on the list. However, due to a long-term trend of declining smoking rates, the corporation has been steadily expanding its product variety in recent years. Altria has a number of non-smoking tobacco brands. It also has a wine business under the St. Michel brand, and it owns 10% of global beer giant Anheuser-Busch InBev, Bud. More recently, Altria has targeted 2 additional product categories for growth: vaping and cannabis. Altria owns a 35% stake in e-cigarette maker Juul and a 45% stake in cannabis producer Cronos Group, Cron. The company is also rolling out its own heated and vapor products such as Marlboro HeatSticks and IQOS, both of which are slowly gaining expansion across the US. In the meantime, Altria's legacy tobacco products are cash cows, allowing the company to pay a high dividend yield of 7%. The company has a target dividend payout ratio of 80% in terms of annual adjusted earnings per share. What do you think about our video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.